Welcome to the Deep Dive. Today, we're tackling a really big question in economics, isn't it?
It really is.
How does being open to trade and how do those taxes on imports, tariffs, how do they actually affect economic growth?
Yeah, it sounds academic, but it hits home, doesn't it? Jobs, prices.
Exactly. It's not abstract theory. It's about, the health of our actual economies. And
Yep.
it's a debate it's been going on for ages, and it's still incredibly relevant.
Absolutely. How goods and services flow, how governments try to manage that flow.
Mhm.
It's really core to economic development. We've been looking at some pretty interesting recent research on this.
Right. So that's our goal for this deep dive. Look at the
Yeah.
research, see what it tells us about these real-world links, trade, tariffs, growth. We've got a study on 11 big G20 economies
Mm-hmm.
and some simulations, too, looking at potential tariff impacts.
Yeah, those are fascinating.
And for our listeners, we know you want to get up to speed quickly but thoroughly.
Hmm.
So we're going to try and, break down these sometimes complex ideas into something understandable. No jargon overload, hopefully.
And the value of this research, I think, is that it uses actual data from these big players. It gives us a glimpse of what's really happened and maybe what could happen.
Okay, let's jump in then. First, big piece.
Hmm.
Trade openness itself, just being open to trade. What did that G20 study find? The basic link.
Well, fundamentally, it found a statistically significant positive connection.
Positive, okay.
Yeah. So, in simple terms, across these 11 countries, there was a pretty clear trend. The more a country traded internationally, imports plus exports as a share of their whole economy.
Right, relative size.
Exactly. The higher that was, the faster their economy tended to grow.
Okay, let's unpack that a bit. It sounds like participating more globally helps the economy. Is there a simple analogy for why that would work?
Sure. Think about maybe two towns next to each other.
Yeah.
If each one tries to do absolutely everything itself, they'll probably be less efficient, right? Maybe one's better at farming, the other's better at making tools.
Okay.
If they open up, trade with each other. The farming town focuses on food, the tool town on tools. They both get better at what they do, more specialized.
Ah, specialization.
Exactly. And they both end up, richer than if they stayed isolated. Now, just scale that idea up to countries.
That makes intuitive sense. Specialization, efficiency.
Yeah.
Classic economics, really.
Right.
But the study said the effect, while significant, might be small. What does that imply?
Well, it suggests that while trade openness gives a consistent, positive nudge to growth over time.
Like a tailwind.
Yeah, exactly. Steady tailwind. It's probably not the only big thing driving growth.
Yeah.
Domestic policies, infrastructure, tech innovation, those are huge too.
Okay.
Trade helps, but it doesn't dictate everything.
Okay, so one important factor among others. Got it. Now let's flip it. Let's talk tariffs. Those import taxes.
Yeah.
What did the G20 study show about their impact?
On the flip side, yeah, it found a statistically significant negative relationship.
Negative. So higher tariffs, slower growth.
Generally, yes. Countries with higher effective tariff rates the taxes actually applied to imports tended to see slower economic growth. And what was interesting is that this seemed even clearer with a one-year lag in the data.
A lag. So impose tariffs today, feel the main pinch next year. Why the delay?
Well, think about it. Businesses, consumers,
Yeah.
they need time to adjust, right? Companies might have existing import contracts,
Okay.
or they need time to find new suppliers, maybe domestic ones if they exist. Consumers might pay more at first, but then they start looking for alternatives or just, cutting back.
Right.
So that lagged effect suggests the full consequences kind of unfold over months, not instantly.
Makes sense. Not like flipping a switch.
Yeah.
Now, we often hear arguments for tariffs protecting local jobs, local industries.
Sure, the protectionism argument.
Yeah. Does this research suggest those benefits are outweighed by the negative growth impact, at least overall?
Well, the study focused on the broad link between overall tariff levels and growth. And at that level, the findings suggest that, yeah, across these big economies, the downsides for overall growth tended to outweigh potential protectionist benefits for specific sectors. It's that classic trade-off, isn't it? A tariff might help one industry, shield it, but it raises costs for other businesses using those imports.
And for consumers buying the final products.
Exactly. So the net effect on the whole economy, according to this study, leans negative.
Okay, so the general picture seems to be trade openness helps growth. Tariffs tend to hurt it. But I'm guessing it's not always quite that simple. Are there nuances?
Oh, absolutely. And this is where it gets really interesting, I think. Some other research looks into whether the type of tariffs matters.
How so?
Well, there's this idea. If a country's tariffs mainly protect industries needing lots of skilled labor, economists might call them skill-biased tariffs.
Okay.
There's a theoretical case that this might, under certain conditions, encourage innovation or productivity gains in those specific high-skill areas.
Interesting. Like trying to nudge development in a certain direction. Could you give an example?
Yeah, imagine a country wants to build up, say, its advanced electronic sector. It might put tariffs on imported high-tech bits and pieces,
Right.
hoping domestic firms will step up and invest in making those themselves. That could lead to new skills, new expertise developing locally, theoretically.
Okay, I see the logic, but what's the catch? Is there a downside to that kind of targeted tariff?
Yes, definitely. The big worry is something called rent-seeking.
Rent-seeking.
Yeah, it's when those protected companies spend their energy lobbying the government to keep the tariffs.
Ah, protecting their protection.
Exactly. Not necessarily getting more innovative or efficient, just
Yeah.
protecting their profits from competition. That can actually end up stifling progress for the whole economy.
Right. Sounds like it could lead to stagnation, not dynamic growth. Now, you also mentioned simulations looking at potential U.S. tariffs. What do those models predict?
Yeah, those simulations looked at hypothetical U.S. tariffs on goods from, you know, major partners like China, Canada, Mexico, and they pretty consistently showed negative outcomes for the U.S.
Like what specifically?
Things like reductions in overall GDP, the size of the economy, fewer jobs created than otherwise, and just less trade happening overall.
And did it matter if other countries hit back with their own tariffs?
Oh, absolutely. The models showed the negative effects got even worse when they factored in retaliation.
So a trade war just digs a deeper hole for everyone involved.
That's overwhelmingly what these kinds of economic models suggest, yeah. It's sort of a negative sum game in many scenarios.
Can you give us a concrete example of how even a specific tariff can cause wider problems?
Sure, think about, well, electronics again. A smartphone. It's got components from all over the place, right?
Definitely.
So if a country puts a tariff on just one type of microchip, maybe one that isn't even made domestically, it still raises the cost of making the whole phone. And that cost either gets passed to consumers' higher prices or it eats into the phone maker's profits, maybe leading to less investment, fewer jobs down the line.
So these complex global supply chains mean tariffs can have these really complicated ripple effects.
Precisely. Things cross borders multiple times in some industries, like automotive too. Tariffs get added at each step, potentially.
Ouch. Okay, but tariffs do bring in money for the government, right? Tax revenue. Does that help offset these downsides?
It's true, they generate revenue, but the economic models, including the simulations we looked at, generally suggest the overall economic costs tend to be larger.
How so?
Well, you have the reduced trade, the higher prices for consumers and businesses,
Right.
potentially lower investment, lower overall economic output. These things often add up to more than the direct revenue gain for the government.
Right.
The simulation suggested that even accounting for the tariff revenue, the broader hit maybe to the nation's capital stock, overall wealth, even wages could still be negative.
That's a really important point. The easy-to-see revenue might hide bigger, harder-to-see costs. What about using tariffs to fix a trade deficit? You know, when a country imports more than it exports.
That argument comes up a lot. But most economists tend to think trade deficits are driven more by deeper factors.
Like what?
Like the balance between how much a country saves versus how much it invests and consumes. National spending habits, basically.
Not just trade policy.
Right. So while tariffs might cut imports a bit, they're not usually seen as a very effective tool for fixing a fundamental savings-investment imbalance. And, they risk retaliation, which could hurt exports and make things worse.
Okay. Now, I've heard about this idea of optimal tariffs. Is that a real thing? Can a country sometimes use tariffs to actually benefit itself?
Ah, yes, optimal tariff theory. It exists, theoretically. The idea is that under very specific, maybe unrealistic conditions,
Like what?
like if you're a very large country with a lot of market power, you can influence world prices, and if your trading partners don't retaliate,
That seems like a big if.
it's a huge if. But if those conditions hold, the theory says you might be able to impose a tariff that improves your own country's terms of trade and economic welfare, basically at the expense of others.
But the real world involves retaliation.
Almost always, yes. And the moment retaliation happens, those theoretical gains from an optimal tariff usually vanish. They can quickly turn into losses for everybody.
Any examples?
Well, look at the analysis of the 2018 U.S.-China trade situation. While some might have made theoretical arguments based on optimal tariffs, many economic studies concluded that the actual tit-for-tat tariffs led to welfare losses for the U.S. economy, not gains.
So theory is one thing, messy reality is another. Okay, now back to that G20 study. It looked at 11 diverse countries. Did it find trade policies affect them all the same way?
No, not at all. That was actually a key finding. The effects can vary quite a bit from country to country.
Really?
Yeah, when they analyzed the G20 nations individually, the results were mixed. It really highlighted that, one-size-fits-all trade policy probably isn't the best approach.
And based on that, the study recommended.
It suggested that opening up trade or reducing tariffs should really be considered on a country-specific basis. You
Yeah.
have to look at each nation's unique situation.
What kinds of things?
Its economic structure, who its main trading partners are, its level of development. What works for Germany might not work for Argentina or India.
That makes sense. The G20 includes such a huge range, doesn't it? From lower middle income to the wealthiest economy.
Exactly. You've got manufacturing powerhouses, commodity exporters, service-based economies, all sorts.
Hmm.
How sensitive they are to trade policy changes will naturally be different.
Right. An emerging economy might prioritize attracting investment through openness, while a developed one might focus more on competitiveness or managing specific trade flows.
Precisely. Understanding that diversity is crucial for smart policy.
Okay, wow, we've covered a lot of ground. Let's try to sum up. Generally, it seems being more open to trade correlates positively with economic growth,
Mm-hmm. Tends to.
while tariffs generally show a negative correlation, especially over time. But it's complex. The type of tariff might matter. Retaliation is a huge factor. Supply chains add complexity, and the effects really vary depending on the specific country.
That's a pretty good summary, I think. And it's worth reminding listeners, these insights come from, analyzing data, using economic models. They're powerful tools, but the real world is always evolving. More research is always needed.
Definitely. So for everyone who joined us on this deep dive, here's maybe a final thought to chew on. Given all these complexities, the potential downsides of tariffs we discussed, what other ways, what innovative strategies could countries use, to boost growth, maybe address trade imbalances, but without resorting to these blunt, potentially harmful trade barriers?
That's a great question to end on. It pushes us beyond just tariffs or no tariffs.
Yeah.
Maybe more focus on international cooperation or investing heavily in education, infrastructure, R&D to boost domestic competitiveness, or fostering totally new export sectors. There could be more sustainable paths.
Lots to think about there. Well, thanks for joining us for this deep dive into trade, tariffs, and growth. We hope it gave you some valuable insights from the research. Keep exploring.